Hello and welcome to Pro Trader Strategies Market Commentary for Friday, January the 26th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. I've been talking about it all week. We get some good economic data in the form of GDP across the pond and here in the United States. So let's start with across the pond. In Great Britain, we've got preliminary GDP quarter over quarter coming in at 0.5, expected to be 0.4. So better than expected there is good. We also have the durable goods here in the United States, which is basic. Core durable goods orders came in at 0.6%, was expected to be 0.5%, and the last month's number was revised up from 0.3%, from 0.1% to 0.3%. We also got advanced GDP price index quarter over quarter came in at 2.4%, expected to be 2.3%. Durable goods orders, which includes like durable goods is basically a long duration purchase. So airplanes, not that we're all buying airplanes, but companies are buying airplanes. So airplanes, autos, appliances, things of that nature. It's something that you're going to hold on to for more than 3 years. And our core durable goods orders came in at 0.6%, expected to be 0.5%. Now, durable goods orders month over month came in at 2.9%, expected to be 0.9%, and they revised last month's number up from 1.3% to 1.7%. So that number is really pretty darn good, to be quite honest. So knocking it out of the park on the core durable goods orders. And then we also got preliminary wholesale inventories came in at 0.2, expected to be 0.4, albeit they did revise last month's number up slightly from 0.7% to 0.8%. At the end of the day, moving inventories is a pretty good thing as long as they continue with the build out rather than stop manufacturing and just get rid of inventory. It's a little tough number to kind of really dig into. All right, so let's look at crude oil inventory or crude oil moving higher today. I did add some USO. I'll talk about this in a minute, but if crude oil gets above this 66, I'm pulling the ripcord on it. I don't care. It's a long put, so I'm just going to dump it if it gets above there. I'm not going to even mess around with probabilities. I think that this should indicate a bit of a top here. It's a pretty big doji. Today's move isn't a confirmation in either direction. It looked like on the after the open we kind of traded down there. It's got to settle below that wick there in order for it to be a real confirmation, and we can't really trade above this wick here. So looking for crude oil to come off a little bit to kind of solidify that USO position. I have a tendency to get in early. Most technicians would say wait till it gets confirmed. I usually don't. Anyway, on to gold futures. Gold futures coming off a little bit today by about $10.50, let's call it. The chart here looks like it's in positive territory, but it's where it opens during the day session on the floor in a sense as back in the day. But since it trades overnight, that's not really taken into account as the opening. So the opening for this was higher than we currently are. So the chart shows what it looks like from the overnight session as well. All right, on to Bitcoin futures. Bitcoin unchanged, 250 points down on the day or something like that. That's pretty much unchanged for the moves that we've seen or we are accustomed to in Bitcoin. It does really seem to be really kind of settling down. It's getting really comfortable right here at this 11,000 mark. So that is the line in the sand. That's where everybody's really comfortable. So once we get above that, extended above that, the bulls are pushing, the shorts are getting on their heels, and vice versa to the downside. the longs would be on their heels if we start rolling down below these two value areas. So this is setting up really nice, and interesting that the Fibonacci levels are lining up quite nicely with some of the other technical things that I look at for the market profile. So it's right there at its sweet spot where everybody's happy. Bonds coming off today, almost a point, basically giving up all of yesterday's gains. This is going to be a real jockey back and forth as we see more data coming out. I think the economic data that we got today is definitely going to lean towards higher interest rates as well, until we start seeing more of a housing crisis and all these people's thumb screws getting put on a little tighter for having adjustable rate mortgages. The VIX coming off a little bit, which is understandable with the equities making new all-time highs in the Dow Jones. As you can see here, Dow Jones Industrial Average, new all-time high in here. We are right in the middle of the range, so to speak. So right around 87 points on the day, but for the range of the opening, we're kind of right in the middle there. Whereas in the NASDAQ, as you can see with the chart here, we are very close to the highs of the day, up 44 points. Looking to test the 7,000 again, possibly today. It's a little bit far away, but it very well could with some of the economic data we're seeing. And, a lot of these stocks are coming out with better than expected earnings, but, since this parabolic move that I've talked about, almost vertical, a lot of speculation going into these. So we're seeing better than expected earnings, but the market's literally falling out of bed and testing, even going through what the market maker move is. So an outpaced move from what was expected is what we're starting to see quite a bit of. So this earnings season could be a tough nut to crack, to be quite honest. I might have to just start selling calls against everything because of the expectation that they're going to just be knocking it out of the park and beating what the street is predicting. And they are beating what the street is predicting, but not by what looks to be enough of a margin to facilitate higher moves in some of these stocks. But the rest of the markets are cruising higher. So it's a little bit of a conundrum going on. E-mini S&P is up almost 15 points on the day, very near the highs of the day. As you can see here, we are about a quarter of a tick off. As we look at the 30-minute chart of the E-mini S&Ps, this is a breakdown. Very, very sideways trade, despite the fact that the chart looks maybe like it's a little bit more bullish. When you break it down here, it looks more sideways. We have moved our value areas above yesterday, so that is an outside day in a sense, and we are very near the highs of the day. So the market continues to climb higher on this Friday as people are putting money to work and continuing to do so. All right, USO, this is a trade that I put on yesterday. As a matter of fact, I still have on some USO. I have on the 12 puts in my margin account. Went into the IRA and added a little bit more to my margin account. And I went into the April and bought the 12.5 puts. So I'm long the 12 puts in April and the 12.5 puts in April in my margin account. And yesterday with the 12.5 puts, I paid 34 cents for those. In my margin account, I did the same thing, went out and bought those April 12.5 puts for 34 cents. So now a little bit of exposure in my margin account, a little overweighted in my trading account, which is another reason why I am going to be out of this trade. If it gets like this gets above 13.5, prints a newer high there, I'm going to be, or 13.3, I'm going to be out of this USO, but that should correlate pretty closely to that crude oil above 66.66. So I'm going to pull a ripcord on that technical breach. I'm not going to wait for probabilities or anything like that for that type of trade. Because I put it on as a technical assumption. I'm going to take it off as a technical assumption as well. All right, on to Colgate-Palmolive. Now, the three that I was looking at was Colgate-Palmolive, Starbucks, and Intel. Of course, Intel popped to the upside. It just wasn't enough premium in Intel for me to really justify putting a trade on there. But I was getting pretty good, juicy premiums from Colgate and Palmolive well outside the market maker move. And as you can see on the opening, Colgate fell out of bed. I did wait for it a little bit on this little pop and got out for 89 cents for those. So Colgate Palmolive, I did in my trading account, not in my IRA, I did Starbucks over there, but in my trading account, Colgate-Palmolive, I went into the January weeklies that expire today and bought these sold these 74 and a half puts in there for 37 cents. I bought them back for 93 cents. So not a great trade on that, but as you can tell, it outpaced the market maker move. Thought we were going to get a little bit of an earlier bounce. I could have covered it a little bit better in that first 15 minutes, possibly, but I was scrambling to get out of my Starbucks at that time when this all happened, so I missed that opportunity there. I waited for the bounce back, and it worked out all right. I mean, I still lost money on it, but happy to get out of that one as well. And with Starbucks, as you can tell, I probably should have held off on the Starbucks because it traded sideways while Colgate was juking all around. But Starbucks just did not look very good off the open, despite the fact that this is another example of why we're seeing earnings better than expected here, and they still sold off. It could have been forward guidance or something like that, but got out of this on the open as well for Starbucks in both my margin account and in my IRA. In my margin account, I went in and did the January, sold the 57 puts in there for 33 cents and bought them back for 29 cents. So basically covered my commission costs on that one. And then in my IRA, I went into the January and had to do the 57 and a half puts and then buy the 53 and a half puts in there for that trade. And that's another reason why I was juking around with the Starbucks, because I had two different strikes. I put on the Starbucks trade yesterday, and the trade started going in my favor, so I was able to get a little bit better pricing for the margin account. It happened within just seconds there as I was trying to put it all together. So actually I did the margin account first and then went into my IRA while Starbucks was pushing higher. Probably right in this area here it started pushing higher, so I kind of had to move my strikes. But anyway, all said and done, in the Starbucks trade, I did the 57 and a half and the 53 and a half for 37 cents total. Got out of just the 57 and a half puts for 35 cents. So maybe lost a little bit of money there too. So we'll gain money though as this market sells off. If we can get another $2 move to the downside, those long puts will be looking very nice. That's all I've done for today. The only thing that we've got going on for earnings going forward is Monday we have earnings on Seagate Technologies. So I haven't decided really what I'm going to do, but this is one of those few times where on a Friday you got to put on your Monday earnings trades. Usually a lot of big companies don't release on Monday morning, but Seagate's going to do that, so I'm going to put on a trade for that. Other than that, I haven't added anything to my portfolio. I want to kind of leave it the way it is to save some margin for all these other trades, other than that USO trade that I added yesterday and might be taking off today. All right, so today's webinar is not going to be on the conversion. I messed that up completely. That is definitely not a beginner to intermediate strategy. That's more of an advanced strategy. And when I was doing it, I just really wasn't thinking that I should probably have synthetic longs and synthetic shorts taught first, because that is part of that strategy. So we're moving that one out. We're going to replace that with the risk reversal today. So we're going to be doing the short risk reversal. There's two types. We're going to be doing the short risk reversal. That will help hedge an overall portfolio if you want to do it that way, or just play a directional assumption. So check it out at protraderstrategies.com. That's all I got for you guys. If you can't take that, take it easy.